The upstream oil and gas sector is painting a fascinating picture as April draws to a close. A stark divide between nations doubling down and others pulling back. I've been tracking movements across continents and signals that couldn't be more mixed as we head into the second quarter of 2025. Welcome to this week's Global Energy Update, where we're diving into the latest upstream developments that matter. From drilling surges in sanctioned states to strategic pipeline projects, the chess pieces are moving in ways that will shape markets for months to come. Russia's pushing the pedal to the metal, drilling new wells at the fastest clip in 5 years despite crude's price slide. That's not just talk, it's steel hitting rock at a pace that signals Moscow's playing the long game. Sanctions be damned. Meanwhile, Iran's boosting gas production at South Pars and deepening energy ties with Russia, firms who are signing deals to develop Iranian oil fields. These two are dancing closer while the West watches from the sidelines. Contrast that with Guyana, where production sagged to 627,000 barrels per day in March from 648,000 in February. Not a collapse, but a hiccup worth watching in what's been in energy's golden child. And in the U.S. shale patch, Matador Resources is dropping a rig by mid-year, the first significant cutback as crude prices put the squeeze on margins. The whispers I'm hearing suggest more operators might follow suit if prices don't find firmer footing. Shifting to strategic maneuvers now, the chess pieces are moving on the geopolitical board too. Iraq and Syria are in talks to restore an oil pipeline to Mediterranean ports, a potential game changer for export routes that could reshape regional energy flows. This isn't just about pipes, it's about power and who controls the taps. Meanwhile, Chevron's reviving exploration in Namibia and planning to drill offshore in what could be Africa's next big play. Smart money's watching this one closely. Success here could trigger a rush that makes Guyana boom look like a warm-up act. Kazakhstan's making waves too, prioritizing its national interest over OPEC plus quotas. That's not just bureaucratic rebellion, it's a direct challenge to the cartel's authority that could ripple through global supply dynamics. When a major producer breaks ranks, everyone feels the tremors. So let's talk hard numbers for a moment. The data doesn't lie. Oil's set for a weekly fall, caught in the crossfire of tariff uncertainties and rising supplies. HSBC just trimmed its Brent crude forecast for 2025 through 2026, a move that speaks volumes about how the headwinds facing this sector. Saudi Arabia pumped up exports by 500,000 barrels a day in February, showing the kingdom is still flexible in its market muscle despite price pressures. So what's all this mean for the months ahead? I'm seeing a tale of two strategies playing out. Nations like Russia and Iran are betting on volume over value, pushing production to maintain market share and revenue streams. They're playing offense while market plays defense. Meanwhile, Western producers are showing the first signs of discipline, with rig counts potentially trending down if prices stay soft. The exploration bright spots like Namibia suggest companies are still hunting for the next big score, but they're being selective about where they place their bets. The pipeline politics between Iraq and Syria remind us that infrastructure remains the backbone of this business. Control the routes and control the game. And Kazakhstan's OPEC plus defiance signals that national interests still trump collective action when push comes to shove. I'm watching for signs that U.S. producers might follow Matador's lead and dial back drilling if crude stays under pressure. The shale patch has shown remarkable resilience, but economics eventually win out over optimism. The smart money's keeping dry powder, focusing on efficiency over expansion, and looking for strategic acquisitions as valuations soften. This isn't a crash, it's a recalibration in a sector that's seen plenty of both. Mark Roach, FutureWise Energy. Signing off, stay sharp out there.